Before starting this experiment, I thought the best TSX60 Canadian stocks for dividends would be a name from either the banks, utility, telecoms, or real estate. Typically popular Canadian dividend stocks that most people would probably think would be best are TD Bank, Bell Canada, and Enbridge. But they weren't the best, and the actual top names would come as a bit of a surprise. So I gathered the relevant dividend data on every TSX60 company, which is basically a list of the largest 60 Canadian companies from practically all major industries. For instance, from the TSX60, you get every Canadian bank, insurance, oil, railroad, telecom, goldmine, and utility company. So we'll see from the list exactly which company gave out the most dividend return on investment, and then we'll see which company gave the most in their own respective industry. Essentially, like my previous video on the best Canadian REIT for dividends, what's important is that as dividend investors, we only care about the total dividend income that we would have generated while holding for the last 5 and 10 years. The idea is that as long as the company keeps paying dividends and doesn't bankrupt, then we don't care about the stock price volatility. Total cumulative dividends should reflect differences in high and low yields, company profits being retained for reinvestment, dividend growth rates, or one-time dividend payments. Whichever company paid the most should imply that they were the best dividend investment over time. Although past results might not indicate future performance, if a company is competent in what it does, it should have a decent level of performance and good dividend payments over longer periods of time. So overall, the best Canadian dividend stocks for dividends this decade were Brookfield Infrastructure, Algonquin Power, Constellation Software, and Inter Pipeline. Each had over 100% return on investment this decade with only dividends. That would imply a 10% annual dividend yield on investment. That's as good as some of the highest dividend yielding companies right now, but it's held successfully for a decade. Perhaps some of these large companies were just lucky this decade, so let's also check which companies did best in a shorter time frame. In the last 5 years, there were a lot of good contenders, but many of the top names were very close to each other. But the ones at the top, all which had 30% dividend returns on investment, were Algonquin Power, Thomson Reuters, Brookfield Infrastructure, Pembina Pipeline, TC Energy, and Inter Pipeline. That would imply an almost 6% annual dividend in the last 5 years. Some of the names repeated again over the shorter time frame, like Algonquin Power, Brookfield Infrastructure, and Inter Pipeline. So I definitely think they are worth considering as good dividend investments over longer periods of time. One quick observation worth mentioning is that I noticed some large companies with very high dividend yields, those over 6%, surprisingly didn't make it to the top of the list. But noticeably, the top names were all utility or pipeline companies. Comparatively speaking, it's possible that some of these sectors pay better dividends over time, even though they all pay pretty high dividend yields. So for the second part of this video, let's run through the companies in each Canadian sector within this TSX60 to see which ones pay the best in their own respective industry, and how sectors compare to each other. For financials, it includes the big Canadian banks, insurance, and investment companies. On a 5-year basis, the best financial company was Thomson Reuters at 33%. The worst was Brookfield Asset Management at 9%, and the financial industry's average was 24%. The banks on average were 26%, and insurance companies were 23%. The best bank was National Bank at 28%, followed by Scotiabank at 27%. The big two insurance companies were matched at 21%, but led by Power Corp at 27%. Here are the same numbers on an annual basis. You could have expected around a 5% annual dividend across the financial industry. When looking on a 10-year basis, the best financial company was still Thomson Reuters at 62%, but Sun Life came pretty close at 61%. The worst was still Brookfield Asset Management at 31%. The financial industry's average was 54%. The banks on average were 56%, and insurance companies were also 56%. The best bank was still National Bank at almost 60%, followed by CIBC at 58%. The best insurance was Sun Life at 61%. Here are the same numbers on an annual basis. You could have expected a 5.5% annual dividend across the financial industry. For energy, it includes integrated and pipeline companies. On a 5-year basis, the best energy company was Pembina Pipeline at 30%, while TC Energy and Inter Pipeline came really close to that mark. The worst was Cenovus at 5%, and the energy industry's average was 21%. The integrateds on average were 10%, and pipelines were much higher at 28%. The best integrated was Suncor at 13%, and the best pipeline was Pembina at 30%. Here are the same numbers on an annual basis. You could have expected around a 4.2% annual dividend across the energy industry. When looking on a 10-year basis, the best energy company was actually Inter Pipeline at 100%. The worst was Imperial Oil at 15%, and the energy industry average was 53%. The integrateds were on average 27%, and pipelines were much higher at 79%. The best integrated was still Suncor at 47%, and the best pipeline was Inter Pipeline at 100%. Here are the same numbers on an annual basis. You could have expected around a 5.3% annual dividend across the energy industry. For utilities, these companies deal with the generation, distribution, and transmission of electricity. There's not many of them within the TSX60, but on a 5-year basis, the best utility company was Algonquin Power at 35%, the worst was Fortis at 22%, and the utility industry's average was 27%. Here are the same numbers on an annual basis. You could have expected around a 5.4% annual dividend across the utilities industry. When looking on a 10-year basis, the best utility company was still Algonquin Power at 106%, the worst was still Fortis at 45%, and the utility industry's average was 70%. Here are the same numbers on an annual basis. You could have expected around a 7% annual dividend across the utilities industry. For telecom, these companies provide a combination of wireless, wireline, and media services. On a 5-year basis, the best telecom company was BCE or Bell Canada at 26%, followed by TELUS at 25%. The worst was Rogers at 19%, and the telecom industry's average was 23%. Here are the same numbers on an annual basis. You could have expected around a 4.6% annual dividend across the telecom industry. When looking on a 10-year basis, the best telecom company was still BCE at 77%, followed by TELUS at 73%, and the worst was still Rogers at 43%, and the telecom industry's average was 60%. Here are the same numbers on an annual basis. You could have expected around a 6% annual dividend across the telecom industry. For industrial, it's a diverse group of companies ranging from railroads, toll roads, and civil engineering. On a 5-year basis, the best was Brookfield Infrastructure Partners at 32%, the worst was Canadian Pacific Railway at 7%, and the industrial industry's average was fairly low at 13%. Here are the same numbers on an annual basis. You could have expected around a 2.6 annual dividend across the industrial industry. When looking on a 10-year basis, the best was still Brookfield Infrastructure at 132%, the worst was SNC-Lavalin at 15%, and the industrial industry's average was 55%. Here are the same numbers on an annual basis. You could have expected around a 5.5% annual dividend across the industrial industry. Interestingly, I've always read that the Canadian rails were great dividend investments because of their dividend growth, but when stretching over long periods of time, it turned out to not be as impressive as the other names that we've seen so far. For technology, which is mostly software companies, as you can expect, they weren't really good dividend investments. Only OpenText and Constellation Software paid dividends, and it was subpar over a 5-year period, which is 8.5% on average and 1.7% per year. Interestingly, over a decade, only Constellation paid dividends and it was 100%. For materials, it includes mining and royalty companies. Like technology, they weren't really fantastic dividend investments. At most, you would have expected roughly a 10% ROI with Wheaton Precious Metals, Barrick Gold, and Franco-Nevada. The materials industry averaged around 7%. Over a 10-year period, not many paid dividends, and you would have expected similar rates of returns anyway. For real estate, there aren't that many within the TSX60 to begin with, besides Canadian Apartments and Brookfield Property Partners, but they averaged 25% in the last 5 years. Over the last decade, only Canadian Apartments had been paying dividends, and it was a 68% ROI. For consumer, the companies are quite diverse in what they do, and can range anywhere from food, to clothes, to car parts. On a 5-year basis, the best was Magna at 18%, followed by Restaurant Brands at 17%. The worst was Dollarama at 2%, and the consumer industry's average was fairly low at 10%. Here are the same numbers on an annual basis. The industry averaged around 2%. When looking on a 10-year basis, the best was still Magna at 69%. The worst was George Weston at 23%, and the consumer industry's average was 39%. Here are the same numbers on an annual basis. The industry averaged around 4%. For healthcare, which would include pharmaceutical or weed companies, didn't pay dividends at all, so we can just exclude them. So summarizing all the sectors within the TSX60, in the last 5 years, the best industry for dividends was the utilities industry. The other 3 good dividend paying sectors was real estate, followed by financials, and then telecom. When also including some of the subsectors within the TSX60, the energy pipelines came in really strong and took over the first place spot over the utilities industry. Integrated energy was on the bottom half of the list, and then breaking down financials, the banks were just behind the utilities at 3rd place, and insurance was just ahead of the telecom companies. When looking over a 10-year period, the energy pipelines still came on top and ahead of the utilities industry, and telecom came out 3rd ahead of the banks and insurance companies. Interestingly, many of the sectors came out really close to each other. So long as you held on to them for a decade, you would have gotten really similar dividend return on investments. So that's all for now. If you enjoyed this video or learned something new, remember to like, subscribe, and turn on your notifications for new investment topics in the future. Let me know in the comments below what's your main dividend investment, and I'll see you next time.